Binay Chandgothia, Managing Director and Portfolio Manager for Principal Global Investors, which helps see over $200 billion in assets globally. Binay, good Monday morning to you. First off, before we talk about why you're overweight the U.S. still, let's talk about what's happening in Greece. Does this give you a trading opportunity to either go long or go short?
Well, I guess some people do that. At our firm, we are longer-term asset allocators, so we don't really look at very short-term market movements. But if it does have a fundamental longer-term impact, we're going to make changes in our portfolios.
Yeah, so what has changed here? I mean, in Greece's terms, we have a new government in place. Papandreou is stepping down. Does that really change the European picture at all or the Greek picture at all?
Not by much, to be honest, because we feel that getting the opposition as a part of the process now gives them a greater deal of flexibility to carry out what they're promising to the EU, IMF, and to other members of the euro area. But if they follow it up with another set of elections, that would bring in some amount of uncertainty about what do the people want. If you look at the polls that were conducted last week, most of the people in Greece do not want elections. So I hope that this coalition government is the end of the political aspect of Greece at this point in time, and they can look to implementing what they're promising to EU and IMF.
Yeah, well, they said that they will hold elections after it's been implemented, so that might be, what, 4 months down the road or something. We'll talk about it then again. What about the G20 summit? Some are saying it was disappointing considering most countries basically said, well, Europe, solve your own issues.
Well, I guess G20 has a point because most of the problems are domestic.
Right.
They did assure them that when the funding need arises, they're going to back the IMF, increase the quota, you know. They didn't specify any numbers because I guess they don't want to indicate a number which has no hard basis to it. And I guess the message is very clear. I mean, it's a domestic problem. You need to take far deeper steps domestically before you look for help on the outside, you know. And if you just look at the composition of G20, a big part is Europe itself.
Right.
So Europe itself has to reform. You look at the US Fed, they're doing the heavy lifting anyway through extremely accommodative monetary policy.
Very extremely accommodative.
In BRICS, I mean, beyond China, I don't think India, Brazil, or Russia have a lot of firepower, you know, to kind of support Europe. So it all comes down to how much is China willing to allocate to the new facility from its own reserves.
Well, they want to allocate to the IMF. That's because they want more say in the IMF.
I guess so, yes. And I think most of them are going to route their allocation to the new EFSF through IMF at some point in time.
Okay, so basically, does this mean that the European problems are not solved? They have to solve it on their own. We got 1.4 trillion in the EFSF. You know, we have a 50% haircut on Greek bonds. Are we still going to be talking about this, say, 6 months down the road? Is it going to get worse before it gets better?
It might get worse before it gets better because if you look at the experience in the last 12 to 18 months in Europe, a crisis brings out the right rational solutions, I guess. So I mean, you saw that we had a great month in October. They had some progress with the big plan in Europe, and then, you know, immediately after that, you had a couple of disappointments. So that's the way they're going to kind of move, you know, I guess, one step forward, one step back, and then 2 steps forward and 1 step back. And we have to live with this in this macro environment where headlines are so important. And just we need to kind of shrug it off at times when it's not too relevant.
Yeah. Now, Binay, when we were speaking in September, you were actually quite brave then, considering the volatility we saw in the markets, and you're overweight equities. What about heading into year's end? Did you take some of the profits, or are you still going headlong into stocks?
We are not overweight in equities in the Eurozone because we think that the banking sector has a lot to do in terms of getting its balance sheet numbers right. The leverage is still very high, so we think that European banks are going to deleverage gradually over the next 4 or 5 years. We like US. We started liking Asia and emerging markets more now because our expectation of monetary policy in this region has changed. We feel that we might just be behind as far as inflation. We might have seen the peak of inflation now in Asia and emerging markets, and therefore emerging market central bankers could move towards loosening monetary policy. Okay,
so overweight to U.S. and emerging Asia still. That includes China, I assume, right?
China, we were underweight earlier. We're kind of neutral now, looking to overweight at the right time.
At the right time. Okay, Binay, thanks for joining us this morning. Good to see you. Binay Chandgothia, Principal Global Investors.